Hi, I'm Dallas Thompson. I'm a licensed real estate broker, general contractor, and engineer. I provided an excellent background for a real estate investor. I do invest in real estate. In this video, I'm going to talk to you about how to invest in real estate. There are many ways to invest in real estate. You can buy a rental property, such as commercial properties, residential property, or even buy what they call fixer-uppers. This is where you buy a house that needs maintenance, fix it up, and sell it. It's also known as flipping houses. That's one way to make money in real estate. If you think about investing in real estate, there are a few things you need to do. First, you need to decide what type of investment you want to make. Do you want to buy a rental property? Invest in what they call REITs, that's real estate investment trust, where a company manages the maintenance. You don't do anything, you just have an investment. I don't really like that one. I like to be more involved. You can pay someone else to do the management. You make more money doing it yourself, but there's a point in time where you call it opportunity time. You're better off having someone else manage the daily renting the property, showing it, collecting the money, making the deposits, doing the maintenance. So I recommend, after you get going, hire a property manager. Investing in rental property can be a great way to build wealth and generate passive income. Passive income, that's the key. Passive income is where it's like YouTube. I go to sleep at night, I'm still making money. You have rentals, you're making money asleep. You're not a wage earner. Wage earners, sadly, they pay the most taxes. If you got real estate, rentals, you hardly pay any taxes. There's a substantial reduction of your tax bill. There is some risk involved. Here are some of the benefits and liabilities of investing in real estate property. Some of the benefits: that you can make money. Rental properties can generate a steady stream of income from rent payments. This income can be used to pay off the mortgage, cover expenses, and save for retirement. If there's any inflation, it's appreciation. Rental properties can appreciate in value over time, which can provide additional profits when the property is sold. And I've already talked about tax benefits. There's a number of tax benefits available in rental properties. In the U.S., Uncle Sam loves property owners. It reduces your tax bill. You can deduct such things as interest. Yes, Uncle Sam helps you subsidize. You can deduct property interest, taxes, and operating expenses of the units. Control. Rental property owners have a great deal of control over their investment. That's why I prefer real estate over stocks, because I have more control. You can choose your tenants, set the rent, raise it, make decisions about repairs and maintenance. The downside: there's always two sides of a coin. Risk of vacancy. Rental properties can become vacant if tenants move out or fail to pay rent. This can lead to loss of income for repairs and maintenance. As you get more familiar with real estate, like apartments, for example, there's kind of rules of thumb, and I won't go into them now, but you'll always figure, for example, 5% vacancy, because even if they're full all the time, there's a little overlap, people renting and moving out. And you'll learn more as you investigate real estate. There's risk of damage. I own a set of apartments. Huge dust storm come up, it blew the windows out, filled the swimming pool full of mud. This stuff happens. Rental properties can be damaged by tenants or by natural disasters. This can lead to costly repairs, even the loss of the property. Lack of liquidity. That means your money is stuck in it. until you sell it. Sometimes you can refinance. Rental properties are not as liquid as other investments, such as stocks or bonds. This means it can be difficult to sell rental property quickly if you need cash. There's a time commitment. Rental property ownership can be a time-consuming investment. You will need to find tenants, collect rent, and make repairs and maintenance. Overall, investing in rental property can be a rewarding experience. However, it is important to weigh the benefits and liabilities carefully before making investments. It's what they call cost-benefit analysis. You should do that on every property you consider buying. How much is it going to benefit you and what's it going to cost? Nothing's free. Here's some additional tips for investing in rental property. Do your research. They call it due diligence. Before you invest in any rental property, it is important to do your research, understand the local market. Does it have a high vacancy rate? What's the market rent? I like to buy a property that's not the rent, I can raise it. This includes looking at factors such as rental demand, property values, and vacancy rates. Buy a property that you can afford. Don't overextend yourself. You want to be able to sleep at night. Make sure that you can afford the mortgage payments, property taxes, and other expenses. Hire a property manager. If you don't have the time or expertise to manage your rental property, consider hiring a property manager. Usually there's kind of rules of thumb, but if you have just a fourplex, it's kind of expensive to have a property manager. If you have 18 apartments, you can afford a manager. You got to figure it out on yourself in terms of cost-benefit analysis. Hiring a manager saves you time and hassle, and it can help you ensure your property is well managed. You got to be patient. Real estate investing is a long-term investment. Don't expect to get rich quickly. Be patient and let your investment grow over time. Remember, it grows while you sleep. Once you decide on the type of investment you want to make, you need to do the research. Find out what areas are good for investment, what type of properties are in demand. After you've done your research, remember, you can't always trust real estate brokers. They're human. They get paid on commission. That means they charge 6%. If you bought a $400,000 house to rent, that's $24,000 you just paid them. So oftentimes they'll tell you what you want to hear so they can get their commission. So use some wisdom and research. Get more than one opinion. Agents are a good source of information. Once you've found a property, you need to make an offer. If your offer is accepted, you put it in escrow, close the property. Let me talk about this offer. It's a key, very important. An example, I made an offer on an existing housing subdivision where the models were already built. I could tell they're trouble. They were absentee owners, and some of the improvements were completed, such as utilities and streets, but not everything was done. I thought, there's opportunity. It's underperforming, and I wanted to finance it 75% of the sales price. So I went to my banker. By carefully selecting my words on the agreement, I managed to purchase with nothing down. It's a multi-million-dollar project. Plus, I received $125,000 cash at the close of escrow. Can you imagine that? I had more money in my pocket than when I started. Plus, I made a sizable investment, nothing down. That's the kind of deals I like to make. Every transaction presents opportunity. How? Well, this particular deal, I received buyer credits for the required improvements that were not completed, and they give me credit in escrow. Now I had the opportunity to construct. I'm a general contractor, so I could build it cheaper. So I had a 105 townhouse subdivision, and also I was a real estate broker, so I made money selling it, and I made money building them, plus the normal profit. After you've closed on the property, you need to manage it. This includes finding tenants, collecting rent, and making repairs. Shop property managers for the reputation, skills, and cost. Rental properties have many different possibilities. Some are single-family houses, apartments, shopping centers, storage units. Storage units, by the way, have a higher return. They go on what they call a capitalization rate. And that means if you paid cash for storage units, and let's say you paid $1 million for them, and you got $100,000 net, well, that's the cap rate. You use that as kind of the yardstick. Apartments also, all your investment, you kind of gauge them. That's one of the tools. Each kind of rental property has its own advantages and disadvantages. I'll discuss later in more detail the various real estate rental market sectors. So, bottom line, investing in real estate can be a great way to build wealth. There's other ways, but this is what I like. However, it's important to do your research and understand the risks involved. There is no free ride. If you're interested in investing in real estate, I encourage you to do your research and learn more about the different options available. Thanks for watching. I hope this video has been helpful. I hope you have questions. Please feel free to leave your comments below. Here are some additional tips for investing in real estate. Start small. Don't try to invest too much money too soon. Start with a small investment and gradually increases your investment over time. I started with 7 apartments, for example. I traded those apartments for 27 apartments. No money out of pocket. I took the equity. I sold it for more than I paid for it. All that money went for down payment for the next apartment. It's like building a pyramid. Get help from professionals. Talk to the brokers, your mortgage people, the bankers. If you're not sure how to invest in real estate, get help from a professional real estate investor or financial advisor. Ask questions. Be patient. Real estate investing is a long-term commitment. Don't expect to get rich quickly. Be patient and let your investment grow over time. A bad investment environment presents opportunities. And it seems kind of odd, like people are losing their houses right now. Bad times presents opportunities. So when people are selling, that's when you should be buying. Be what they call a contrarian. Do the opposite of what everybody else does. When the market's good for the buyer, sell. And when everybody's selling, buy. So I hope you've learned a little bit. And this channel will concentrate on real estate opportunities. And I look forward to your comments. And if you're something you want me to make a video on real estate investments, let me know. Thank you.